Estado de la Unión. Vamos a intentar desgranar estas claves. Lo hacemos con Edward Moya, Market Analyst en Marketpulse and Oanda. Edward, thank you so much for having us a few minutes. Good afternoon from Spain.
Always a pleasure to be on. Thank you.
Edward, tonight we are expecting the Biden's State of Union speech. Of course, he will talk about the evolution of inflation, the resilient labor market with the last labor market report. Which are for you the key economic issues to watch right now in the US?
Right now, I think everyone's focused on relationships with China. I think this is something that was really kind of in the back burner, and it seems that tensions are going the wrong way. And you're probably going to see that as far as what President Biden's going to talk about with the economy, he's going to be pleased. You know, we've seen just a resilient labor market. The service sector part of the economy is still doing very well, and even the parts that have been battered, you know, real estate and Wall Street, you know, those recessions are expected to end in that part of the economy. And as far as tech goes, a lot of these, you know, big tech layoff announcements, there's still ample job opportunities out there. So I think for much of the country, you know, as far as finding employment, that's not an issue. Paying for things, that's still the big concern on Americans. So I think you'll see a bigger emphasis on trying to help continue with these disinflation trends. But I think you're going to see there's not going to be much the Biden administration will get done with these next, you know, this next go around, because they lost control of the House, and the Republicans have been already talking about what they want. And, you know, I think the debt ceiling is going to be a big concern. It'll go down to the wire, but that story won't really impact markets for quite a few months.
Well, as you say, everyone is looking at China and its relations with the U.S. The tensions that we are seeing the last days, especially for this spy balloon, as the Pentagon said, and investors, of course, are looking at the next Powell speech today. Could he deliver some monetary policy clue, especially after the labor market report last Friday?
I think what we're going to see is Fed Chair Powell is going to become very concerned that you're not going to have, I think, disinflation trends firmly remain in place. This labor market's too strong. I think he really wished he could have seen that report before his press conference, and you'll probably see him take back some of his comments. You know, the latest Fed speak from Bostic and Kashkari, it's a Fed pushback. It's going to say inflation, you know, still needs to be conquered, and it's going to be tough because this labor market's too strong. So I think the risks of more tightening still remain on the table, and Fed Chair Powell is going to try to convince markets that the Fed could still do more, but I think you're still seeing a lot of confidence that investors are still pricing in a rate cut by the end of the year, and I think the Fed really needs to make the argument that rates will stay higher for longer, because inflation's probably going to struggle to break below 4%, I think, in the next couple of months.
Janet Yellen said yesterday that the U.S. can't talk about the recession with the current unemployment rate. Do you agree with her?
I think that we're going to see economic growth in the first quarter. I think we still have a consumer that is spending. They are making ends meet. I think this is an economy that, are we recession bound? Yes. Can we be recession bound if the unemployment rate is at these several decade lows? No. I think you're going to need to see the unemployment rate start to tick above 4% before you'll really see, I think, a strong argument that a recession will be, you know, printed, and you know, two consecutive quarters for GDP is going to be hard to come by right now. But I think it's still in the cards. I think it's still going to happen because inflation is still enemy number one, and the Fed is going to have to deliver more hikes. I think, you know, 2 at the minimum, and that's something the market's not really fully priced in yet. So I think Yellen is right. And but I think we will see this labor market weaken, and that will be mainly due to a couple of factors. But I think Fed tightening, and I think we are going to see a greater slowdown that hits the service sector, and that's probably not going to take hold until the second quarter.
And talking about the current earnings season, how are you seeing the last earnings reports of companies?
Well, I mean, there's some signs that yes, the things are not looking good. I think I think we've gone through the banks, we've gone through tech, and now we're hearing more parts about the economy. There's considerable weakness that is going to be expected. I think the playbook for a lot of companies was that you need to see this economy really kind of struggle here in order to bring down inflation. And right now, I think there's signs that that's starting to happen. I think whether it's Tyson Foods earnings, you're going to see margins are going to get tested. I think this is probably a market that's going to probably have a couple of tough quarters here. And I think a lot of companies, they've been, focused on cost saving measures. So, stocks are doing fine because yes, companies are announcing buybacks, and a lot of them are still, I think, able to, benefit from, such a resilient economy. But I think for the most part, earnings, we've seen some big misses. I think, for companies with good growth potential, when you see their stocks sell off of that earnings miss, then that's the time to buy. And I still think U.S. equities is not, this is not a market you want to avoid. I think it still has good potential, but I think you're probably looking to buy on more significant dips, and we'll probably have them once the data shows a slowdown is really entrenched in the economy.
Edward Moya, thank you so much. As always, a pleasure.
Thank you.
Pues nosotros